I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He's speaking to us from Superior, Colorado. Welcome back to the show, Rick.
Always glad to be here, Jim.
Gold down slightly today along with silver. The U.S. equity market's up. Is this the real deal? Are the U.S. equity markets healthy again?
Well, I'm afraid it is. They are not healthy, but they are going higher, at least according to my technical runes. The E-mini S&Ps, S&P 500 futures, currently 2117. I've just put out a technically based forecast to 2250. If it gets there, that's about a little more than 1,000-point Dow rally. So if the Dow were to fall by 10,000 points over the next month, I would say that's right. It would feel right as rain. But when push comes to shove, I just look at my charts.
Why technically is it working when a lot of people have a bad feeling about it?
Well, it's that old wall of worry, none more formidable than my own wall. But we've got a huge infusion of funny money globally, and just a part of it trickles down to easy loans for the companies themselves, which have gotten in the habit of buying their own shares back to boost their earnings per share. So that's been a major factor, $1 trillion plus factor in propping up the market. And there's so many of those artificial props that work off money that can be borrowed for next to nothing that we shouldn't look at the rallies or the stock market strength as being in any way indicative of a healthy economy.
Why is it companies have been doing that? Is it because CEOs get bonuses for boosting the stock? Well, meanwhile, they haven't built any new facilities or hired any more people or produced any more new products.
Well, that's exactly right. It works like a perpetual motion machine because, yes, their bonuses are all tied to the performance of not so much the company but of the stock. And the easiest way to get the stock price up is for a company to buy its own shares back. So, and you find that the incentive to do so is so strong that even companies that have more cash than they know what to do with are out there borrowing. You ask them why? Well, because we can, and it costs us nothing. So, it really is self-sustaining.
If a person's investing, should they be taking a look at who is buying and selling shares?
No, it's really an institutional game. You know, we used to have a market that at least marked time to sanity in some ways now and then, but it's completely institutionally driven now. The little guy is no longer in the market, and to the extent he is, he's certainly not the decision maker. So we've got institutions on all their buy programs, and they basically knee-jerk on the same, on news, on Friday, week payroll numbers. So the reflex reaction is, oh, well, that means the economy is weaker, and it means the Fed might not tighten or might be less inclined to tighten, but we know that's all a lot of malarkey. The big picture hasn't changed, and the Fed is, just to prove it can walk the walk, is going to tighten in some very token way.
Yes, Janet Yellen again hinted the other day that the Fed's going to hike interest rates, even though the job numbers from last month were horrible.
Well, it's kind of an insult when she's out. Whenever she's talking, everybody out there in the heartland should think we're really being insulted because the Fed, its job really is to manage expectations, but it does so with such crude tools and with such horrifically bad rhetoric that you really don't feel like they they're not acting as though they're talking to an intelligent audience.
I think the Fed creates what I call a positive feedback loop. That's like when you pull the cork out of the bottom of a boat, the more water it takes on, the more water it takes on. And yet she claims that her decisions are made on data. Well, all the information about jobs, housing, investments in the U.S., apart from, I think, housing starts, everything was down drastically in the last couple of months. Yet she's still saying things are really good.
Yeah, just ask the guy on Main Street about that, or for that matter, ask anybody who lives in any neighborhood with the shopping malls. You can see the death of brick and mortar retail, and although in the bigger Adam Smith scheme of things, you've got creative destruction going on. We've got inefficient use of capital moving to other places. The problem is we don't have enough other places to absorb the migration of money out of commercial real estate into who knows what. It could be fusion energy, it could be some type of energy storage or whatever. Those industries haven't developed quite enough to receive capital and make very efficient use of it. So in the meantime, the death of brick and mortar retail is its creative destruction of the first order, and certainly the stock market hasn't taken it in stride yet.
Right, I heard a study that 1 in 3 major shopping malls will shut down because the anchor tenant, a major department store most likely, is not going to be there any longer.
Yeah, that's surely happening in my neighborhood. You know, we've had, there's a cluster of big stores, Great Indoors, which I'm guessing is probably over maybe 80,000 square feet or larger. It closed down, and the Best Buy right next to it shut down around Christmas time of all seasons. So there'll never be a tenant for those buildings, and they'll probably have to tear them down eventually. But I'm assuming that Colorado is by no means unique. In fact, the state is growing, particularly this area. I live near Boulder, and if they're closing malls down here, they're probably shutting down everywhere.
Well, of course, Denver did have, the oil business to prop it up. I think the same thing happened there as has happened in Calgary, where all of a sudden people who were making $200,000, $300,000 a year in the oil patch don't have jobs now.
Well, after the oil bust in the late 80s, Denver kind of diversified, and I would say they've done a pretty good job at it. There's a lot of high tech here, and a pretty fluid venture scene that has been developing in Boulder, for one. You've got the proximity of University of Colorado, Denver University, and it's a good place for companies to come and hire. And Boulder now has big tenants, and Google, which is doing a major expansion. Microsoft has its Bing facility here. So it's kind of a go-to place for companies that want to be able to offer their employees a work opportunity where they don't have to spend $2 million on a home as you do in the Silicon Valley. So we're growing by leaps and bounds, but even so, you can see the weight of web-based shopping coming to rest on brick and mortar.
Amazon did open a physical store in the Seattle area, but they say that's the only one they're going to do. It's kind of to say, hey, we're really here. We're not just something that exists on your computer.
Yeah, and they can afford it. Amazon can put up an office tower because they are there in Seattle. And in fact, as you can see, just one employer at the margin has essentially floated all boats. It's brought the entire city of Seattle back.
We'll have more with Rick Ackerman right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. In the oil patch in BC and Alberta, some gas stations ran out of fuel because of the shutdown of the major plants in Fort McMurray because of the fire that ravaged the city. They're now coming back online. Unfortunately, they didn't have enough oil in the pipeline to keep things going, plus a refinery in Edmonton had to shut down for unscheduled maintenance, creating a shortage. Of course, it seems to me every spring there's a reason why they have to boost gasoline prices. There's always a fire or an explosion or both at some major refinery, and that's always the reason they use for boosting prices, even though they know the driving season is right there. And again, so this year, that same thing happened. A fire, a loss of a facility due to maintenance, and a shortage and a reason to hike prices. Is this the same song and dance you see in the U.S.?
Absolutely. You know, remember when we were kids and you go to the gas pump and it was 25 cents a gallon or even less, and the prices used to fluctuate by pennies over years. And here, you know, just on the basis of some of the factors that you mentioned, you know, the dog and pony show about maintenance, shutting down this refinery for maintenance, and we had the Alberta fire and this and that, prices at the pump have gone up more than 25%. So here I was buying premium gas for close to $2 a couple months ago, and now we're at, I think I paid $2.57 yesterday. And when you consider the number of gallons that are sold, the number of dollars that are taxed out of those gallons, and everything else, it's a huge number. It relative to what the consumer economy spends on all goods and services. A 25% increase in the price of gas to keep America moving is a very large number, and it's so volatile. It swings around like prices in your grocery store produce department.
Well, of course, yes. In Canada, we have to make up for the U.S. dollar premium. Then we import all of our fruit and vegetables over the winter. So we saw food prices go up 14%. What I noticed, though, is that now we're into warmer weather and we don't have the restrictions on the import of fresh produce. It still hasn't, people never get to pay less again. They like to keep the prices higher.
Well, yep, they say prices are inflexible downward, or, it has to do with the elasticity of demand, and just a little bit can cause gas prices to go through the roof in a matter of days or weeks, and for prices to come back down, it takes months and months and months and months.
Yeah, they keep telling us that it's a 90-day delay between the price at the wellhead and the price at the pump, but it seemed to me they sure didn't hesitate to hike prices. It should be another 2 months before the shutdown in Fort McMurray hits the market.
Exactly.
What is the look for oil futures right now?
I've been looking for a move into my exact target on the July NYMEX contract is 51.49, and I see that as the upper limit of a dead cat bounce that has occurred from somewhere around 27 basis the NYMEX futures. So the interesting thing about the crude oil quote-unquote story is that it's been driven this time by supply-side stories. Usually when the price is going up, we get this happy time story about, India's economy is going great guns and China's going great guns. But in this case, China at the margin is slipping into recession, or has slipped into recession. And so the demand picture, or the supply picture, the demand picture is looking kind of weak. So hitting the drums instead on the supply with these fabricated stories. Any day now the Venezuelan supplies could cease, and Nigeria could lower its output even more, and then where would we be? So it seems like a phony story to try to talk up oil prices with these perceived or imagined threats coming from the supply side.
Well, at the time that we're speaking, oil is at $50 flat, up 31 cents, and of course that's helped the Canadian dollar. It's
certainly true, and there are a few boats that get floated when crude prices are rising that act as a benefit to the overall economy, the world economy, and certainly the banksters have been praying for a little inflation in the oil patch because so much of the lending that they did after the housing, the mortgage securities collapse of 2007 and 8, all the lending shifted to oil-based collateral. So the bankers are obviously happy to see oil prices rising.
And I would imagine, too, when the prices went down into the 20s, oil producers tried to become as efficient as possible. So now that the price is up to $50 a barrel, some of them could be making money now, couldn't they?
Yeah, I mean, you could see as crude came down from 70, 60, 50, 40, you'd read in the newspapers about this facility or that facility shutting down. It turns out that the fracking part of it is pretty agile. You know, it's a lot easier for them to shut down production than it is to take large sea-based drilling platforms out of circulation.
I've also heard too that wells that were fracking based do not last as long as the traditional big pool of oil below the ground production.
That I don't know about. It sounds logical. But overall, your fracking industry is a lot more nimble than the big rig drillers.
And of course, because of the new technology, I mean, I keep hearing that the technology in the oil patch is advancing so rapidly that places, say 5 years ago, where production would have been minimal, now you can get a decent amount of oil out of it.
Well, it's true. We don't hear too much from the peak oil guys anymore. That was an argument that had its vogue a number of years ago, but it does seem that whenever the picture is starting to look grim on the supply side, that new supplies that were thought not even to exist years before or to be exploitable or somehow getting exploited.
And apparently in some places in Saudi Arabia where oil patches were depleted back in the 50s and 60s, that oil has come back, which some people now believe perhaps fossil fuel really isn't fossil fuel. It's some kind of natural process that takes place in the earth.
That's interesting. You know, it's not as though the Saudis needed to top off their reserves. It seemed as though even at the peak rates that they could keep pumping more or less forever without running dry.
And of course, OPEC recently again couldn't come to agreement on limiting production or freezing it at current levels. And Saudi Arabia even promised, though, it would not try to take advantage of that. They're handing out IOUs for their bills right now. Would they be in any position to take advantage of it?
Well, it seems stupid to try to curtail supplies when you've got so many desperate suppliers, Venezuela near the top of the list, who are going to be affecting the price at the margin. You know, for every barrel of oil that Saudi Arabia cuts, Venezuela would be more than happy to fill the gap. For that matter, so would Iran with natural gas production. So there are enough big suppliers at the margin who are desperate for money that it's pointless for the Saudis to try to talk sense into price-fixing sense into the Russians or whoever else.
I heard in Venezuela it's such desperate times now that people are paying $10 an egg.
Yeah, great socialist experiment. It's still, I guess, paradise to people like Sean Penn, but things are supposedly really horrible in Venezuela. Like, can't even buy toilet paper horrible, and they're on food rationing, energy rationing, and it's obviously a very direct result of dictatorship.
Well, yes, Venezuela's president's advice to cure their blackouts and brownouts is for women to stop blow-drying their hair.
Huh. Well, I think they've got something like that down in Florida where you get $137 credit each year if you allow Florida Power and Light to selectively produce outages in your house or apartment. You know, they will at peak hours say, well, here we've got the approval from the person who lives at 156 Elm Street to shut off his air conditioning.
Which, of course, if you're a senior, must be really pleasant.
Not exactly. Have you been there in the summer recently?
Well, just here in Vancouver, we've been in the 30s, which, is 80s, low 90s on the Fahrenheit scale, and this is a city that doesn't have a lot of air conditioning.
Yeah, I lived in San Francisco for some time, and it's really, coming from the eastern seaboard where it's hot and muggy all summer, the ability to go through an entire summer without even needing air conditioning is a real joy.
Rick, thank you very much for chatting with us.
Well, thank you, Jim, for...
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He was speaking to us from Superior, Colorado. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions or comments for Rick can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.